What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and headed into earnings. Don't forget to check out the description below. You can find the link to Traders Helping Traders Discord, where I'm hanging out during market hours. You can find the link to the merch shop. You can find information about my social media pages. Also still have slots available for one-on-one individual mentoring. That can be as long as you want it to be, and those time slots are available on Sunday. So reach out over social media or find me on Discord if you're interested in some one-on-one market mentoring. So without further ado, let's jump into the charts. Okay, so today, coming off of this big sell-off from Wednesday, Thursday, Friday last week, we found ourselves with a small gap down open, which was quickly filled, and eventually we rallied up a little bit. We had a wick that gave us a higher high. We ended a little bit lower than that. We also traded down a little bit and more or less consolidated inside of this candle. It's a green candle. It's not necessarily bullish or bearish. To me, we got an uptrend, we got a reversal, we got a beginning of a downtrend. Is this possibly just a bounce in a downtrend? Quite possibly. We had this bigger downtrend, correction move, more selling. Right? Is this just a bounce that's going to lead us to lower lows? We'll be watching for that. But right now, until we clear this candle body high right here at 259, basically, we're still considering this thing to be bearish. Okay, so a couple things I want to note. We have our previous day high, which was up here. We did not get to it. We're going to adjust that now to reflect today's high as the previous day high leading into tomorrow. And we still have our previous week low, sell side liquidity, and we have our sell side liquidity that sits down below. We still have our daily point of control volume node, and let's take a look and see if after today's price, that continues to be an accurate volume node for us. I doubt it adjusted because we aren't trading back to that level, but we'll just go ahead and look. All right, so it does look actually like we have a volume node here. And I do want to just make sure that based on that we weren't looking at this full move here. Nope, we don't. So we do have a volume node adjustment that we want to recognize. So if we're looking at just this move here from the reversal and we're looking at today's price, we're going to put a point of control right here. Actually, I think this volume node came all the way back from this entire move down there. So we are going to put that as an area of interest. And you can see from this entire multi-wave move here, we actually closed right at the point of control for that wave structure. So we're going to put that on our charts as an area of interest. Okay, we're going to anchor it here so we remember where it came from. And we're going to put day one, point of control, volume node. Actually, we want it to match what the other chart says, so we're going to, or the other level says, so we're going to call it daily point of control volume node. Okay, so we got that level in. So we got two different points of control. We have a higher one up here that represents a much larger structure. We have the one set from the most recent moves. And so those are on the map. Okay, something else I want to point out is that this fair value gap that was laid here on the daily candles from way back in the beginning of October is still open. And if you look at this candle high, you have a high of 250 and 2 cents. And if you look at today's open, it's at 250.05. So even though the line appears that we closed or opened below it, and that fair value gap would be closed, it indeed is not closed. 3 cent difference kept this open. So the fact that this is open, we could rally a little bit higher. Okay, the fact that we hit it nearly to perfection, within a few pennies of perfection, could say that we might want to keep that open, rally a little bit higher, see if we want to test this candle body high, and then maybe sell down a little bit after earnings or come back and take out that fair value gap. Okay, but again, wicks do the damage, bodies tell the story. This fair value gap is technically still open, by 3 pennies. And so other things that we're noticing on the chart, we have our symmetrical triangle that is still in play. We have not come down to test the boundaries of here. So heading into earnings, do we rally a little bit higher and even higher than that and test the upper boundary or the resistance line here? Do we trade up a little bit, hit earnings, sell down, maybe test this lower support, possibly break it and take some sell side liquidity? It would take that symmetrical triangle off the map, but it would not take the resistance line off the map. So that triangle would have played out if it breaks down or breaks up, and then we're still looking at holding either support or holding resistance depending on the move that we see. So let's drop down into the 4-hour chart and see if there's anything going on there. Okay, I don't have my smart money indicator turned on right now. I do have my silver bullet macros turned on, which I'll turn off for you guys. Let's throw on some moving averages and see what the moving averages are telling us on the 4-hour chart. And the moving averages are telling us that we respected the 200 period moving average here, and we've traded up through it or up above it, but we still have not broken above the VWAP on the 4-hour, the 20 period, or the 50 period. All right, so we still have this 4-hour candle body that we're going to run a test on potentially up to 259 and see if that holds. That would be right around or above these moving averages, but we could just run a test on it and then come back down and sell off. So a lot is going to be hinging on earnings. Those come up on Thursday. So there wasn't a whole lot of action today. It was a really slow moving day for Tesla, which I'm not surprised with earnings around the corner. Implied volatility so high on options contracts. And after such a big sell-off that the market would be hesitant to be buying right now. Potentially looking for a much better buying opportunity. If earnings sends this thing to the downside, then that would be the opportunity that the bulls are looking for to swoop shares up at a lower price and then maybe run this thing higher. I do see a bearish fair value gap here. We're trading inside of it, so we will be watching that. Let's go ahead and slap on our smart money indicator. Doesn't show the bearish one right here, but it does show that we're inside a 4-hour bullish fair value gap, which you can see has also been held open, where we hit it to the wick and then traded back up after that. And so there's some confluence there with this bullish fair value gap, also inside a giant 4-hour order block. That's a internal order block with the yellow ones, and we are ultimately respecting that 200 period moving average on the 4-hour. Now that could continue to hold. We did see a break below here. We saw a test. We saw a break below, rallied up. We saw it test, right? We've come back down. We've tested it. It's held. Does that want to drive us higher? If we get above this 50 period and this 20 period on the 4-hour time frame, maybe earnings come out. They're good. We rally up. We might see a little false breakdown. We rally up. We get above those moving averages. We're bullish. We're heading into this 272 to 279 range order block. Might see some reaction there. We'd break this resistance line. We'd take out some of the liquidity, and then we'd head higher. Right? We do have these equal highs, and we do expect these equal highs will be broke at some point. That's equal high, equal low theory. That equals get smashed eventually, right? But we had the equal highs that showed a double top-ish, and then we sold off from there. But we are going to come back and take these equal highs. It's just a matter of time. Time is always the variable. So let's drop down into the 1-hour chart. Right. Again, we have our moving averages. On the 1-hour chart, we have a important bearish fair value gap up here that we know we're going to trade back into. Those are magnetic. So on this chart, we'll slap a magnet on there. We'll say we know price is going to want to draw back into it. It's driven away from it. Now it's going to want to draw back into it. Okay, something that we're watching on this time frame is we're watching the order block down below, and we're watching the support trend line. So we are currently below all moving averages, but we do not have the ultimate bearish look on the moving averages, which would be the 50 under the 200 period. We just ran a test of the 20 period. We have not got above that. So technically it's a bearish look, but not as bearish as it could be if the 50 period was below the 200 period. Right? And if we continue, we could run a test. Again, we have this breakdown candle. where we have a high back up at 259. That was the target we talked about in the daily and the 4-hour candle. So do we run a test on this breakdown candle here? We've already tested this candle. We've already tested this candle, hit it with the wick today and rejected it. But, tomorrow or Wednesday, do we run a test on this breakdown candle? And do we see something around 259 level? Maybe even pop over into this fair value gap and then sell off further closer to earnings or on earnings day. That's totally a possibility, but we could only come up here, get rejected by these moving averages, and then sell down to test the order block, the internal order block, and test the support level, and then see if we can catch a rebound from there. Further down below, we have sell side liquidity. We have another internal order block here, and even further, we have sell side liquidity. Now, we do have an oversold reading that gave us a divergence where we set a lower low with a wick, and that was during today's morning session. And we set up a RSI divergence that has given us a nice little rebound. So do we continue to test this moving average on the RSI and run us up? Again, we'd be looking to test this candle body, potentially these equal wicks here, and see if we could take them. Those equal wicks are just shy of 260. So I did have a price target when I called out some 250 calls on Friday near the end of day. We were down here. I said 250 calls swinging into next week. My ultimate target would be only 260. I do not expect us to have a face rip and rally or anything crazy heading into earnings. That could come after earnings sometime or near the end of the month, as seasonality suggests that the market should be bullish into November and December. But for the shorter term, I'm only looking for 260 as a potential run up prior to earnings, and then see if we get a drop there. Or alternatively, we could respect these moving averages and just get a drop either Tuesday or Wednesday. So if we drop down into the lower time frame charts, we'll look at the 15-minute chart. You can see on the 15-minute chart, we had, again, some RSI divergence where we were setting lower lows, with the low being into today's trading session. And we had RSI setting up the bullish divergence. We were looking at the 15-minute opening candle today in the trading rooms on Discord, where we were looking at the high and the low, and we were looking for a potential breakout. Well, we consolidated most of the day. That breakout of that 15-minute range, opening range, high and low, didn't come all the way until 2 p.m. during the trading session. That was a little bit too late for me to feel comfortable taking that entry. I wanted to see expansion happen here during the AM session. If we expanded up through that opening range during the AM session, even into early lunch period, I would have felt more confident about that trade. Again, targeting this 260-ish range. There's a lot of wicks up there. That's going to be strong resistance. We have this order block. I would have been targeting this order block if we broke out of that opening range during AM session. Now, what we did do is just consolidate basically the entire day, like watching paint dry, and we set an internal order block here on a swing block, and we traded a little bit higher, and then we kind of consolidated for the rest of the day. Very boring price action. We got that break, but it came way too late in the session that I didn't feel comfortable entering the trade at that point. I do still think we're going to try to plug up into this order block, because we are above the 20 period on the short-term time frame. On the 5-minute, we're above the 20, we're above the 50. We need the 50 to curl up a little bit. We're above VWAP, and we have the 200 period resting nicely inside this order block. Right, I'm going to take out this magnet because that magnet's from a different time frame, but we do still have this swing order block that I'm looking for, and the swing order blocks on my chart are gray, which also sits inside a yellow order block here. We also have another swing one up here. The yellow ones are all internal. And so on this chart, again, we're watching this order block below, also sits here right on this support level. And so if we start to fall, we're likely to head down to, the 246, potentially even breaking down with some wicks or some 1-minute candles down to 244.50. And I would expect a sharp rebound after that. If we started that before earnings, I would expect us to buy up during earnings or right after earnings and see a rally, maybe back all the way up to 260 after that. So we'll just have to see what happens there. But today, again, was very boring price action. Nothing happened that I was looking to happen. Didn't take any Tesla trades today. Here's a better look at that 5-minute where we had our opening range that gave us a low here, a high here. We had equal lows down here that got swiped by this candle and this wick. And then we just kind of traded around. We got a swing order block here. and we traded into it. We're gathering orders, right? Consolidation is just building a move, building energy for a move in a direction. And we came down into the order block. We tested it. We ultimately saw some rallying and some buying happening. We had a nice little 5-minute breakout candle, but nothing like the first 15-minute candle. And then we set a bullish fair value gap that we are currently still trading into. Now we are running a test on the 200 period on the 5-minute chart. We are below the 20 period. We are above the 50. Now, we just ran out of time basically for the next move, or it'll take us into tomorrow. Now this is a little bit of a bearish look because of the fact that we came up, grabbed this 200 period, trading below the 20 period. Does that 20 period roll over? The 200 drive us down to test that support level. Let's look at what that would look like. Okay, if you had we'll just use a trend line tool, but if you had the 200 period continuing like this, and then you had your 20 period that just rolled over, giving you probably a more sharp drop, maybe something like that. Right, we'd cross over the 50. The 50 would roll over, maybe cross above the 20 or the 200 and then roll over from there. We'd be below VWAP. So we'd be looking at this order block to be given because we've already traded into it now twice. We'd be looking to see if that order block held as support, where we also have all of this consolidation, or if we ultimately ran a test on the support level and the below order block. Okay, so things that we're watching on the 5-minute chart as we go into tomorrow's trading session is that we do have a little bit of a bearish look, but if we open with a gap open, we could take out that 200 period easily, and without a doubt, we could see a run up into the 258, 259, even up to 260 range. And then when we look at the 1 minute, even just a closer view of what was going on today. Again, we got that opening range. I was looking for a breakout. We saw this move here. I was hoping that we would cross over during that AM session. We never did, so the trade entry wasn't there. It ended up being on SPY today. We caught a nice move on the 15-minute opening range on SPY, called it out in the Helping Traders Discord, and we caught a 95% call out on that trade. But this one, because also the fact that up here is our peaks almost to 260, that would have had to have been a pretty nice rally. And after all this selling, I'm not surprised that we didn't get there today. Again, here gives you a better look that we had a change of character that happened here. We broke that opening range. We traded a little bit above, but nothing I was confident in taking the trade. If we look at the swings on the 1 minute, we do have an order block that sits around the same place as the other order blocks on the other time frame. We do have an oversold reading. We are testing on the 1 minute time frame the 200 period moving average, but below the 20 and the 50, but we are above VWAP. So a little bit contradicting on the 1 minute and 5 minute, but we are leading into a new trading session tomorrow. So we could easily gap down or gap up and take out any of those moving averages that were on the 1 minute or 5 minute time frame. If we gap down, we could take out VWAP, take out the 200 period, run down into this order block, potentially down to our trend line of support. Or if we gap up, we could gap over these moving averages, and again on the 5 minute we'd be gapping over the 200 period moving average, and we could see a run up to 260 pretty easily. We know Tesla has the ability to move. We know that earnings are coming up. They're just around the corner. Lots of people are anticipating a big move coming with earnings or right after, and so we'll be just watching to see what develops with the market. But sometimes just a reminder that when Tesla isn't playing out, there's lots of other great stocks you guys can be looking at. And like I said, on SPY, we were able to play the 15-minute opening range breakout, and we got a 95% call out in the trading rooms. And so, doesn't mean you got to be locked into Tesla 100% of the time. If the trade doesn't look like it's there and you're still looking to make some money, there's plenty of other assets to be traded. So keep an open mind as far as I know it can get really boring sometimes if you're just watching. You're just sitting here on the charts watching this chop and chop. I mean, lucky if you grabbed, maybe down here, you grab this order block entry, which didn't give you a clear indication. The RSI was pointed down below moving averages. Not necessarily a great setup, but it is an order block entry. So great job if you grab that and you maybe rode that up from 250 to 253 and some change. That was a nice scalp, right? But we're just chopping and chopping. Or if you happen to catch this top here, there was probably an order block right here in this top. If you could have grabbed a short there, wrote it down to the previous order block, you caught another $2-3 move on the stock price. And so if you're scalping options, you got to be quick, but the chop can still provide trades. Just nothing that I liked, nothing that I felt comfortable calling out or entering myself. So I hope this has been a beneficial analysis for you guys. I continue to appreciate all the support that you guys offer and have a fun time hanging out with you guys in the Discord. And so I look forward to the next trading session, and we'll see you then.